Hey, this is A-Rod with OGEconomics.com. Today is March 14, 2023. This is a short video in regards to the markets. I want to take a look at a couple indexes here and try and determine what direction the market will take over the next couple days to a couple weeks. The first index I wanted to take a look at here is the percentage of stocks above the 200-day moving average. Anything above the 200-day moving average is considered to be in a bull market. Anything below is considered to be in a bear market. And so the first thing I want you to notice is here in February 2nd of this year, the number of stocks that were above the 200-day moving average was about 67%. And as of today, it's right at 40, let's just call it 41%. So there's been a number of stocks that have moved since February from above the 200-day moving average to now below, because there's only 40% of them above it now. The second thing I want you to notice is this blue line here with these dots. This is our own proprietary oscillator. And it's a measurement of momentum. And the one thing I want you to notice about this oscillator is that this red line here is the zero line. You can see it's over here on the zero. Our oscillator just crossed down below the zero line as of today's close. So what that means is that anything above the zero line is positive momentum. Anything below the zero line is negative momentum. So as our oscillator is now crossed down below the zero line, that means momentum is going to accelerate to the downside. What we're probably going to see over the next couple of days is the price of the number of stocks above the 200-day moving average. Maybe we see, 42, 41, 40, bounce around in this, flat area. And then what it'll do is the oscillator will continue to go to the downside, and then you'll see prices then move to catch up to the oscillator coming to the downside. So that would be my first expectation on the market over the next couple days to a couple weeks. We may get some flat line. We may get a little bit of an up move, possibly over the next couple days, and then we get another move to the downside, and that's the real move. Let's take a look at two ETFs. One is the QQQ, and you can see here, in this case, our blue oscillator is moving down from an overbought level. However, it's still above the zero line here. Price going back to since February 1st, we have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, we have a lower low, we have a lower high, we have a lower low. So all it's doing is the market is moving, gyrating, relieving an overbought position. And so at this point, the QQQ is just pretty much been going sideways in terms of price for the last couple weeks, working off an overbought position. And let's take a look at the yellow oscillator. Now, the yellow oscillator is designed more for short-term trading. And you can see here, this was last Friday, the oscillator got extremely oversold, and it was also oversold previous to that in mid-February. It was also oversold here December, also oversold in going back to September of last year. Every time we get oversold, then the price can move to the upside. But price is really not going anywhere. All it's doing is fluctuating between overbought, oversold, and going back to September of last year, the market has gone sideways. So my expectation isn't necessarily based on what the QQQ is showing me. My expectation is what the index is showing me on the number of stocks above the 200-day moving average. If we do go sideways here and then move to the downside, then the Qs are also going to move to the downside. And one other index I want to take a look at here is the Dow index, and I'm going to switch this to our blue oscillator. So one thing you notice here is our oscillator crossed down below the zero line on February 27th. It went down for, it looks like 3 or 4 days, and then you see price has a counter trend rally to the upside, only to give way and make a lower low than this low made on March 1st, and our oscillator is moving to the downside. Now, previously in October of last year, you can see our oscillator got very oversold. Price went down to about, let's see, this was 287, and then because it was so oversold, it was able to get back up to the 348 level before it started moving sideways and then now to the downside. So my expectation is that the oscillator is going to continue to move to the downside. Prices are going to continue to move to the downside, probably come back down and retest these 287 levels before we can determine the next move from there. So that would be my expectation as of right now. Let's switch this to the yellow oscillator, see what it shows us in the short term. You know, the one thing I notice here is that we had this period where the oscillator was oversold. We had a second one, we had a third one, let's say that's a fourth one, we had a fifth one and a sixth one. So we had 6 periods where the oscillator was in the oversold level. Going to the overbought level, we really only had one, let's say 2 periods here. This one was in October, and then we also had a very short one in November. But the majority of the time since September, our oscillator has been in the oversold area with price not really going anywhere. And so to me, what that's suggesting is that the market is actually weaker than what it appears like underneath the surface. And that's what this other index, the number of stocks above the above the 200-day moving average, is suggesting, is that the market internally is much weaker than what it looks like, because we've got a lot less stocks above the 200-day moving average, suggesting that there's less stocks that are bullish at this point. And so one last thing I want to show you, just as a comparison, we're going to put up the blue oscillator, and then we're going to do a side-by-side comparison with the QQQ. So the QQQ oscillator, blue oscillator, is above the zero line. I already mentioned that. And the blue oscillator is below the zero line. So right now, the Dow is diverging negatively from the QQQ. And the Dow is only 30 stocks. So I think that the market is much weaker than what it appears like, and I would say that the QQQ may be able to run a little bit here over the next couple days, but my expectation would be is that the QQQ starts to move to the downside and accelerate to catch up to what the Dow's been doing. So that's something to definitely watch out for. I will say the markets are very fluid. Things are changing, day by day they're changing. And so if something changes on the charts, then I'll have to change my analysis. But right now, I'm pretty bearish, looking for maybe a couple days of sideways movement, maybe to the upside a little bit, relieve some of the oversold conditions, and then we move right back down to the downside. So if anything changes, I'll let you know. If you got some value from this video, please like it, please share it. If you have a comment, good or bad, go ahead and list it down below. I'll do my best to answer as quick as possible. And I appreciate your time. You have a great day.